Could I still qualify for the qualified business income deduction for rental activities, even if I do not have real estate professional status? Jeff.
This is a subject that Congress and Treasury went round and round and round. Fortunately, you can declare that your real estate business is a trade or business for 199A purposes, which is the qualified business income deduction. Real estate professional is automatically a trade or business and gets the same thing.
Well, I might disagree with you slightly on that. You're passive. The real estate is still passive, but for the real estate professional, it becomes non-passive. It's an exception to the rule under 469, right?
Oh, yes.
Right.
Yes.
So does it make it QBI? I don't think so. I think for qualified business income, you have to have, let me see if I remember this. It's 199A, but you have rental real estate, you have commercial real estate, and you have triple net lease real estate, and you have safe harbors on each. You have to have 250 hours of aggregating your rental properties or your commercial properties, or I don't think you get to do
triple
your
net lease
triple is nothing, right? So you have those two,
right,
and you have to keep them separate, and you have to keep separate books on them. It's crazy. So QBI, I always look at it and go, why the hell would you want to do that? Because it's a 20% deduction on your net income. And in real estate, when was the last time you saw net income?
Yeah, with real estate, especially residential real estate or even commercial real estate, you're usually seeing tax losses, not necessarily cash losses, but tax losses.
Yeah.
And to declare those to be qualified business actually goes against you if you're taking losses.
Toasts you because they net out all of your businesses. So if you have a business that qualifies for QBI, and let's say it makes 100 grand, you get a 20% deduction off the top because Congress said yay under the 2017 Tax Cut and Jobs Act. And then you have real estate and you're like, yeah, let's call it QBI, and it loses money. You have to take the loss against the other income just for QBI purposes. You don't get to take the loss for real. Still a passive loss. But then
that doesn't seem fair.
It's a complete hosing of the taxpayer, but they love to hose the taxpayer. But you'd almost have to walk into that because you'd have to say it's QBI. Hey, I separated out my books and I did 250 hours, because you're not going to prove it for them, right?
Yeah.
So if you don't do that and you don't aggregate them, then you'd be like, up yours. But then you have real estate professional status, which is this other thing entirely, which is if I have passive losses, ordinarily passive losses only offset passive gain. Now there's two exceptions. Exception number one, and this is for real estate, rental real estate. There's two types of passive income: rental real estate and businesses that you do not materially participate in. So just for real estate, there's two exceptions. Exception one is the $25,000 active participation, and it phases out between $100,000 and $150,000 of AGI. Option number two is real estate professional status, which does not phase out at all, but I have to meet the 750-hour test in a real estate trader business that I materially participate in, and I have to materially participate on the properties that I'm attempting to declare as non-passive. So I'd have to aggregate my properties together more than likely.
And this is one that really they went back and forth on and almost said, no, real estate professionals cannot be QBI.
It's weird, isn't it?
Yeah.
Yeah, because they were like, it came out and with no forethought. Like, it's just Congress doing what Congress does, which they pass things because it's a pretty shiny thing. And then they forget that there's tax professionals that actually have to advise their clients, and the Treasury actually has to enforce the rule, and nobody knows what the rules are. So and there were no rules. It was just it was like a little section. I think 199A was like a tiny little section. And it was like, oh, yeah, you just hopelessly complicated something that should be simple. If you really want to give a tax deduction, just give a tax deduction.
Yeah, and the way Congress works is they get 10,000 pages of this tax act and say, I'll have my page, read it later.
Oh, they screw things up all the time.
Oh, yeah.
Yeah, we're still trying to figure out the CARES Act. We're still asking, oh, shoot, we were just dealing with conservation easements, right, and historical properties. And you're like, could you please give us some guidance? And they're like, we'll think about it. Mm. Anyway, enough of that. So could you still qualify for QBI for rental activities, even if you don't have the real estate professional status? The answer is yes. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.